Good evening, everyone, and welcome on this slightly dreary Wednesday evening. Our presenters today will brighten up at the end of this day, I have no doubt. The content of today's session is specifically for pharmacy owners in the north of England, and we will be looking at what's going on in the market right now, how pharmacies in the north compare to those in the rest of the country, the steps of selling, the legal process and pitfalls to look out for, accounting best practice with a specific look at tax efficiency. So when you do sell, you don't leave any money on the table. And we will also have a Q&A at the end of the session. So if you do have questions now or throughout the session, please type them in the dedicated questions box and we will pick these up at the end. Our expert panel today consists of Paul Steet, Senior Pharmacy Consultant at Hutchings Consultants, Tim Clarke, partner at Clarke, Mairs, Solicitors, who is also joined by Laura and Alex, who will be on hand during the Q&A, and Atif Butt, Senior Accountant at Hutchings Accountants. Kicking us off today is Paul Steet. So Paul, bear with me 2 seconds and I will hand you over control of the mouse and keyboard and I will share these slides.
Thank you, Sam. So once again, hello everyone, thank you for joining us. The 3 presentations this evening will explain the process involved in selling your pharmacy business from valuation through to completion. The knowledge and advice we are sharing with you has the overall theme of seeking to minimise your stress during a sale and maximising the price you eventually walk away with. All 3 companies have years of knowledge and experience in pharmacy sales and understand how a pharmacy transaction should work. For those of you who have not sold through Hutchings Consultants before, I just wanted to briefly explain that we are the largest independent pharmacy-only agent in the UK. Our typical sales will range from single pharmacies with a turnover of around £300,000 up to small groups with around £100 million turnover. We are approved and recommended by the NPA to its members for the selling and buying of pharmacy businesses since 2005. And are currently the only NPA supplier to reach platinum status. We have an excellent reputation in the sector, and we are clear that we only work for you, the seller. For example, we don't take a referral fee for introducing buyers to finance brokers. So therefore, there is no risk of potential conflicts of interest that can arise during a sale, which could potentially create an issue. Overall, we have a wealth of knowledge and experience in selling pharmacy businesses, and this enables us to provide you with an insight on current factors affecting the market. Before I move on to explaining the process of valuing and selling your pharmacy business, I'd like to briefly share with you what effect we have seen as a result of the pandemic and run through some key business performance indicators. Despite the wide-ranging challenges thrown up due to COVID-19, the market has remained buoyant over the last few years. Pharmacy has been viewed by many buyers as a relatively safe haven when compared to other more volatile sectors. New buyer registrations rose significantly in 2020 and almost doubled when compared to earlier years, although last year's figures saw a return to more steady levels. We've been approached by potential buyers from outside of pharmacy keen to invest, although the vast majority of completed deals have been agreed to buyers already operating in the sector. The number of pharmacies coming onto the market fell in 2020 and early 2021, as many owners were either too busy dealing with the fallout from COVID, or they may have wanted to understandably take advantage of the increased income generated. However, this has changed in the latter half of last year, as many owners finally found some breathing space to contemplate sale. Most notably, in the last 12 months, we've experienced a massive 400% increase in sales in Northern England compared to the previous 12 months, demonstrating many operators' pent-up desire to sell. The major banks who traditionally lend to the pharmacy sector have remained supportive, although they have tightened their lending criteria and are heavily scrutinising lending applications from buyers. I'll now move on to run through some of the key performance indicators. You will see over the next few slides that in order to provide a benchmark comparison, I have included both UK, Northern England and South East England sales statistics. The UK-wide figures cover Scotland, Wales and England. I've used South East England figures as a comparison, as this region of the country generally achieves higher prices compared to the rest of England, partly due to the higher number of buyers in this area. As a guide, pence in pound figures provide a broad overview of prices that have been achieved. You will see from this slide that average pence in pound figures in Northern England have remained consistent over the last 3 years at around 83p paid for each pound turnover. Both the UK and South East figures have fluctuated since 2019 and are currently hovering around 92p. The wave of smaller, less profitable pharmacies, offloaded by the multiples and larger groups seen over the last few years, has now passed, and more profitable pharmacies are starting to appear in the market. This has led to an improvement in the average figures, although proportionally, these are currently dispersed across all regions of the country. I must stress the point that these figures show an average price only. Every pharmacy business sale is individual, and there will be sales that achieve a price below these figures and others that far exceed it. This next slide shows the average number of offers received per sale. You will notice that whilst the UK figures have remained steady, the average number of offers received in our Northern England sales has increased. This may reflect the increased number of better geographically located pharmacies entering the market for sale, resulting in more competition between buyers bidding to secure the business. This next graph shows the multiple of EBITDA, also known as the adjusted net profit achieved on sales since 2019. As I just mentioned, the wave of loss-making or barely profitable pharmacies sold in recent years meant many buyers reverted to making an offer based on pence in pound methodology. This had the effect of pushing up the EBITDA multiples. An important key performance indicator for both sellers and buyers is the gross profit percentage margin the business is achieving. As this slide demonstrates, margins increased in 2021 compared to recent years. This perhaps reflects the hard work invested by many owners who have recognised the need to focus on this area during these challenging times. So which group of buyers are the most active in the marketplace right now? Well, since the start of the first lockdown, we've experienced an elevated level of buyer activity, which has been reassuring to see. Around 77% of new buyer registrations in the last year have been first-time buyers. This has been a consistent trend for a number of years now. At the start of lockdown in 2020, we had a wave of buyers register from outside of pharmacy seeking a secure investment. This wave has subsided and the vast majority of sales continue to involve buyers already in the sector. Group owners are active when the right opportunity arises, and some of the corporates and multiples have started buying again, having trimmed poor performing branches from their portfolios. All categories of buyers are making offers, creating more competition, which as a seller you ideally want to encourage. Interestingly, we're finding an increasing amount of buyers based in the Midlands and Scotland are seriously looking at opportunities in the north of England. Compared to the Scottish market, where pence in pound figures are averaging more than double that seen in England, prices are looking ever more attractive. Crucially, the increased competition between buyers can strengthen the seller's negotiating position when offers are called in. This next slide shows the breakdown of the buyers and sales completed and agreed in Northern England over the last 12 months. As you can see, the most active category of buyers has been group owners at 46%, followed by existing pharmacy owners seeking to expand, and lastly, first-time buyers. This demonstrates that increasingly larger turnover pharmacies have been entering the market in the north of England, which as a result has reduced opportunities for first-time buyers to acquire, mainly due to their lower funding capabilities compared to existing operators. To demonstrate the buoyancy in the market, I wanted to quickly show you two examples of recently completed sales. I'm unable to divulge too much information for confidentiality reasons, but the first example is a pharmacy in the Tyne and Wear area. which had a turnover in the region of 1.4 million and dispensed around 12,300 items per month. Following a period of marketing, we received offers from 3 parties and eventually accepted an offer from a group owner more than £100,000 over the marketing price. This next example was a pharmacy based in Lancashire which had a turnover of around £840,000 and dispensed around 7,500 items per month. We received offers from 3 parties and agreed a price with a first-time buyer of £30,000 over the marketing price. I hope that provides you with a brief overview of the current marketplace. I will now move on to explaining the steps involved in taking a pharmacy business to the market through to completion. Before we can start the marketing, we need to establish a value for your business and recommend a marketing price. A competent agent will want to understand your business before they can advise you, and will need to gather financial information from you to conduct the valuation. This is an example of the information we usually require. We don't want to overburden you, but the more information we have at this stage, the more accurate we can be with the valuation. This will reduce the risk of disappointment for you when offers are called in. We review all the information supplied and produce an adjusted profit and loss. This establishes an EBITDA figure. We then calculate the value by adding a multiplier and at the same point consider any other factors that can affect the value. There are many factors a competent agent needs to consider when valuing a business. This slide shows just some of the main factors, but there are many more. Factors such as wholesale income and private scrips will have a defined monetary effect on value. Others, such as the level of competition in the area or business potential, are harder to define but still need to be considered. We're sometimes asked to value a business based on just the turnover or items, for example. We're reluctant to do this as it can lead to misleading figures. To provide a credible valuation for you, a professional agent will always need a certain amount of information to understand your business. Most sellers understandably want to achieve the best price they can when it comes to a sale. You've worked extremely hard over the years to make the business a success, and it's important to feel rewarded for this when you hand the reins over to a new buyer. As you've seen, there are a large number of factors that can affect the valuation. Many owners ask us which areas of the business they should focus on to increase its value. For most pharmacies, there are 4 key areas to focus on, as they can improve the saleability and value of the business. Firstly, gross profit percentage margin. As previously mentioned, this is at the forefront of most buyers' minds when looking to buy a pharmacy. As previously seen earlier, the average margin currently in the country is around 32 to 33%. A slight increase in margin can potentially add significant value to the business. Take, for example, a pharmacy with a turnover of £750,000 and a gross profit margin of 30%. An increase of just 1% in margin could potentially add around £50,000 to the value by the time a multiplier is added to the net profit, assuming costs remain the same. Many of our clients advise us they are devoting more time to the buying side of the business and spending more time on researching the best prices. Working hard to improve your margin will be time wasted if you allow your business costs to run out of control. If you're planning to sell, it's so important to keep a tight rein on costs. Both the buyer, their accountant and lender will scrutinise your profit and loss. Staff pay increases and ongoing bonuses, for example, will affect your bottom line, particularly if they're above the industry norm. I can think of one particular sale I had where my client had rewarded a long-standing member of staff with a significant bonus over the years without considering the impacts on his bottom line and a potential sale price in the future. I'm not suggesting you don't reward staff, but recommend you keep an eye on your costs, particularly in the run-up to a sale. Item numbers. Even though the remuneration contract is encouraging the provision of more clinical services, these are still hugely important in the marketplace. Buyers are attracted to busy pharmacies with strong increase in item numbers. I appreciate if you're planning to sell, this may not be an area you wish to focus on, but it will increase the sellability of your business when you eventually do come to sell. Finally, pharmacies operating on a lease basis should ideally have around 15 years remaining on the lease at the point of marketing. Banks usually match the term of the buyer's loan to the remaining term on the lease. So if you have a short lease of say less than 10 years left, this can present an issue for a buyer obtaining the bank support they need. An experienced owner with a good relationship with their bank may find it a little less problematic. Nevertheless, the lease should be considered for renewal if less than 10 years, if at all possible. If you feel this could be an issue for you, do speak to us before approaching your landlord, as we should be able to guide you on the best strategy around this. So coming back to what is next in the process, we have the confidential meeting. This is an opportunity for the consultant to meet you and spend some time understanding your objectives and discussing any concerns you may have. The meeting normally takes place at the premises once the staff have left for the day. This allows us an opportunity to view the premises without alerting staff. Alternatively, if this isn't possible for any reason, we can conduct a mystery shop exercise that meets you off-site at a suitable venue. During the meeting, we discuss and agree the marketing strategy, and it's another opportunity to answer any queries you may have. The next step in the process is preparing the sales literature. A sales brochure is designed to be eye-catching to potential buyers and covers the most salient points of the business, demonstrating profitability and potential. The key is also to provide sufficient information to buyers at an early stage in order to reduce the volume of questions they may ask. The marketing only commences once you've reviewed and signed off the final document and are happy to move forwards. A confidential listing is usually added to our website, as this generates buyer inquiries, but we take care to avoid disclosing the exact location of the pharmacy for sale. We also prepare a separate financials pack, which includes copies of the accounts, FP34s, VAT returns, OTC figures, and a copy of the lease if applicable. Before moving on, I wanted to talk a little bit about the different sales strategies we use to generate buyer interest. As I mentioned, we always discuss and agree with our client the most suitable strategy to use prior to marketing beginning. The most common strategy adopted is the full marketing approach, but occasionally we will recommend to our clients a more discreet off-market approach is taken. Whichever approach we take, we only contact potential buyers who have registered with us and signed our non-disclosure agreement. With the full marketing approach, an initial shortlist of buyers is created from our database of several thousand buyers. When researching buyers, the consultants will look at who's active in the market currently, viewing or making offers, and also who do we believe has the necessary funds available. The consultants will also discuss the sale with other team members to seek their recommendations as well. Potential buyers then receive the memorandum of sale, followed by the financials pack if they're interested. The buyers are also followed up and viewings are generated as a result. We keep the marketing under constant review, and the buyers list can quickly be expanded if necessary. Where we've identified an opportunity for an off-market approach, we will discuss and agree the process with the seller. A direct approach is made to the selected buyer or a handful of selected buyers who we believe could potentially have a strong desire to acquire the business, should they be made aware of it. If they're not already registered with us, we will request they formally do so and sign a non-disclosure agreement before they receive any information. Once the NDA is signed, they initially receive the memorandum of sale, followed by the financials pack, if they have that further interest. During the discussions with the buyer, they are made aware that they have been given an opportunity to acquire the business before it's hit the open market, and should therefore make a strong offer if they want to secure it. If for any reason we're unable to come to an agreement, we can quickly revert to the open market approach. As mentioned earlier, this strategy is only appropriate in certain situations and is only recommended when a suitable opportunity has been identified. With the full marketing strategy, the average period of marketing where viewings are taking place is usually around 6 to 8 weeks on average. Each pharmacy sale is different, so this period can sometimes be shorter than this or sometimes longer, depending on the circumstances. Hutchings used a tried and tested structured offer process that's been used over many years. Occasionally, we may recommend to a seller they consider an individual offer, but in most cases, when we feel it's appropriate to set an offer deadline and call in offers, we will discuss and agree this with our client before setting that date. We use a formal offer template letter to avoid any misunderstandings. This is particularly important with company share sales, as they are usually more complicated. As part of the process, we request proof of funding and work to secure a deposit from the buyer if their offer is accepted. This is usually no less than £20,000. Following the initial round of offers, we provide some general feedback to buyers before calling in the best and final offers. This allows interested parties to fine-tune their bids and helps increase the competition between them. The competition generated allows us to negotiate the best price terms possible. Once an offer is accepted, we then move into the legal stage. I won't go into too much depth about this, as both Tim and Atif will cover this area in more detail for you. But we arrange for the buyer's deposit to be paid across to your solicitor, who holds the monies in their client account. The deposit monies are held in accordance with an exclusivity agreement, which both the buyer and seller are asked to sign. In exchange for paying the deposit, the buyer is granted a period of exclusivity whereby other potential buyers are excluded from making an offer. We then issue the heads of terms to all parties, including the professional advisors confirming the sale. Our role as an agent then changes from one of marketing to that of sales progression, as we consult with all parties during the sale to ensure the sale is progressing forwards. Once an offer is accepted, an average timescale to reach completion is around 4 to 6 months. However, there are many factors that can slow this down, such as COVID-19, bank delays, the NHS change of ownership process, and lease issues, to name but a few. As I come towards the end of my presentation, I wanted to briefly highlight some of the key issues for buyers which can adversely affect the sale and even the final purchase price, which you as a seller should avoid if at all possible. This slide shows some of the most common issues that arise, but by no means covers them all. I want to highlight 3 of the most common issues that tend to arise. We often see accounts which are inaccurate. This can have a detrimental effect on a buyer's confidence to proceed or pay a premium price, as well as impact the lender's willingness to lend. A common error in accounts, for example, is when locum costs are inserted in the cost of sales instead of appearing under expenses as with other staff salaries. This simple error can distort the gross profit margin and make the business appear less attractive. This can potentially result in a lower offer from buyers, or in a worst case scenario, no offers at all. It's important that your accounts are presented as accurately and easy to understand as possible to avoid creating any uncertainty on the buyer's behalf. Another common issue that can occur is when a seller employs new or additional members of staff after a sale has been agreed. Whilst you must continue to run the business up until completion, it's important that buyers are consulted about staff changes, as extra staff costs could impact their funding or business plans post-completion. Without consulting with them, you could leave yourself open to a buyer possibly seeking to renegotiate the sale price. The final issue that can cause a significant problem is where either in the run-up to a sale or during a sale, expensive contracts are renewed. An example of this could be new computers or software systems. A new owner may wish to incorporate the pharmacy into an existing system they currently use, or may prefer an alternative provider for other reasons. But ideally, where possible, these decisions should be delayed or taken in consultation with the new incoming owner, who will be responsible for the ongoing costs post-completion of the sale. When considering selling, it's important to appoint an agent who can provide guidance, support, and is prepared to work hard to achieve the best outcome for you. The team at Hutchings Consultants and our sister company, Hutchings Accountants, strongly believe that we have the necessary expertise, knowledge and skills to manage your sale and achieve the best price the market will pay for your business. At Hutchings, we have a close-knit team who have over 130 years combined experience and knowledge selling pharmacies. We take pride in the service we provide to our clients and work hard to achieve the best outcome for them. Our experience ensures we can oversee your sale right from the start through to completion. Although we regularly travel around the UK, our team is based in one central office, which allows us to quickly share intelligence on buyers and the current market. We collaborate closely with our colleagues at Hutchings Accountants. If an accountancy-related issue arises during a sale, we can quickly call upon their specialist accounting expertise for advice. So many times their valuable assistance has helped keep a sale on track which otherwise might have come unstuck. We have a large database of potential buyers who have registered from across the UK. They range from eager first-time buyers through to the multiples who we have strong contacts with. This allows us to attract potential buyers for our pharmacy very, very quickly. Finally, we have a straightforward, no sale, no fee agreement. There are no upfront marketing costs at all, and we only receive our commission once your sale is completed. We only act for our client, the seller. We're clear that we do not act for buyers or take fees from them. This is important as you need to be assured that when a buyer makes you an offer, all the funds they have available are going to you and none are reserved for the agent. So that concludes my presentation for this evening. If you'd like to discuss a potential sale, please don't hesitate to contact me or my colleagues. We can offer you a free verbal valuation and a free tax review. We can also arrange a confidential meeting with either myself or one of my fellow consultants at your pharmacy. I will now hand you over to Tim at Clarke Mairs, who will explain the important role they have in the sale of the pharmacy business. Thank you.
Okay, thanks, Paul. Wow, I'm looking quite dark on my screen. Paul, how do I look on yours?
Tim, I'm just going to jump in here and tell you that you are very dark.
Hey, that might not be a bad thing, you know.
Okay, well, okay, it's over to you, Tim.
Okay. Thanks, Paul. Thanks, Sam. Good evening, everybody. I'm Tim Clarke. I'm a partner with Clarke Mairs Solicitors, and this is a presentation specifically for the North, and we are quite genuinely in the North. We're based in Newcastle upon Tyne. I personally live probably furthest north than anybody here. I live north of Hadrian's Wall in Northumberland. I was anticipating I might get all my power cut off before we get to this, but anyway, we'll carry on. The key point I'm going to emphasize throughout this, I'm not going to dwell too long by systematically going through my slides. I'm going to focus your minds on what you need to do to make this a stress-free exercise. Once you've decided to sell your pharmacy, you need to be prepared to do the work. And we're here to help you. Hutchings will definitely be there to help you. We do a lot of work deals with Hutchings, and they are very proactive. They're very hands-on. They get involved, and as do Hutchings accountants. So we work well together. But the key message is be prepared to do that work. Prepare for the sale. If you're not prepared to do it, then your sale will potentially fall through. It does happen. There have been one or two where clients have simply not done the work needed, and the buyers have gone away. They've found something else. Eventually, you'll end up selling it, even if you're in that category, because you'll then realise you do need to do the work. So, what does that involve with us? Well, we're solicitors. We do the legal work. Usually, if you go and see a solicitor, you'll expect to start paying fees, and that might put you off. Don't get put off by that. The arrangement we have, if a pharmacy sale comes to us through Hutchings, because we have the confidence of the pedigree of the people involved there, and the fact that if they've marketed your pharmacy for you, if they are marketing your pharmacy for you, then it's serious. We will offer you a no sale, no fee arrangement. And we do that because, as I say, we're confident you will achieve a sale, and consequently we will get paid. But also, it helps us. It helps us get involved at a very early stage. Once you've spoken to Hutchings and you've said, yeah, you like what you're hearing, and you put your pharmacy on the market with them, we'd like to think that the very next phone call you make will be to us, have a conversation with us to make sure you like us. We will take some details. We will give you a fee quote. It will be a fixed fee quote. It won't go up or down. It will be the amount we tell you, but you won't pay that to us until you achieve a pharmacy sale. And you're then paid, of course, out of your proceeds of sale. But from that point onwards, from that conversation, from providing you with that fee quote and some detailed information as to the process, more detailed than you'll see on the slides in front of you, we will want to be involved with you. We will want you to be proactive in working with us in getting all of the information we need that we know the buyers, the lawyers, and the bank and the lenders will need from you. If your buyer was funding things out of their own back pocket, frankly, they'd likely take a view on a whole raft of things. But they're few and far between. Most buyers will be borrowing money, and their lenders will, to an extent, dictate what information they will be happy with. So we will, on day one, once you've signed up with us, we will provide you with our standard set of inquiries that we know will almost certainly be substantially, if not exactly, what we would expect to receive from the buyers or lawyers. And I say that because the lawyers we deal with on pharmacy matters, sometimes we come across ones we've never heard of before, and that may be a good thing, maybe a bad thing, but usually we're dealing with law firms that we've dealt with quite regularly, and we can anticipate what they will want to know. So we will send you a set of questions, and that will take you a while to go through. It will take you more than a day just sitting there to go through, pull the information together, to work closely with the accountants that you're appointing to advise you, and you will then present us with your information, your replies to those inquiries, and we will go through them. We will sit down, go through them. We will then discuss them with you. We don't need to meet you to do it. We can have remote meetings. We can do it over the phone. But we know what we're looking for. We know what type of replies the buyers will be expecting from us. That will be a process that won't be done within a week, within 2 weeks. It will take a few weeks to do. It will be asking you everything about your pharmacy business. If it's an asset sale, it won't be as much as it will be with a share sale. A share sale, there's a lot more for the buyers to find out. So that's a very important process. Laura Dobson, my colleague who was introduced to you before, she's on hand for Q&As. Laura gets involved on the property side of things in our weekly meetings. Most of the meeting is taken up by Laura, talking about the property aspects of the sale. It is quite common for problems to arise on the property. That will be something you never thought about. You probably didn't even have it raised with you when you either bought your property, when you refinanced, or you took a lease of your property. It may well never have been raised with you by the lawyers or whoever was acting for you at the time. But it will be picked up in that initial process, in that initial due diligence process that we are going through, so that when we get contacted by buyers or lawyers, we will, touch wood, have a full pack. We'll have anticipated all of the issues, and we'll have worked with you to resolve them. Paul mentioned the lease. That is almost always an issue we have to deal with. The leases, if you've got a lease term of less than 10 years, you are limiting the market quite considerably if you don't seek to have some agreement with your landlord to extend that lease. If you've got a lease term of between 10 and 15 years, you're increasing the market again. There are a number of lenders out there now who are offering far more favourable terms to buyers, but on the basis of a 15-year term loan. So those are the sorts of things we will be looking at, property related, and we'll be discussing those with you. It will be an ongoing, evolving process. And we'd rather hope that you're not taking yourselves off on holidays and thinking that leaving it all with us and we can deal with it. It is a labour of love, if I can term it that way. You will have to deal with it, and eventually we'll get there. So the key message to this point is be prepared to spend the time to achieve a stress-free, successful sale. Okay, so, I've not been clicking my slides, have I? Apologies, take me back. Covered off all of that, not the sales structure. Okay, you will be running your business either through a company or through as a sole individual, or if there are two or more of you through a partnership, or if you're sole individual, sole trader. If it's through a company, you'll be selling through a share sale. A share sale, a lot more work involved because the buyers will, as I said before, need to find out a lot more about the business. If you're not involved in a company and you are either a private individual or two or more people, you'll be selling your pharmacy on an asset sale basis. Not as much work involved in the due diligence, but still the same amount of work involved on the property, and buyers will want to know everything about it that you can tell them. In terms of what we do, Hutchings will come up with a set of heads of terms. We will sometimes input in those. If you've gone to other agents, if you've negotiated a private sale, the heads of terms may well not be what Hutchings would come up with, in which case we would expect to be involved and perhaps a little bit more on those. But in terms of the heads of terms, that's a very important document. Quite often we are told by lawyers on the other side, well, that's not what it says in the heads of terms. If they've been prepared by Hutchings, that's usually not the case. Other sets that we see, well, who knows. Deposit agreements, Paul touched on this as a sign of good faith. If you want somebody to buy your pharmacy, if you want to accept their offer, if you're prepared to say to them, we will accept your offer, you do want them to put up a deposit, and usually £20,000 or thereabouts, quite usual, so that if they subsequently pull out for any good reason, for no good reason, then you can take that deposit. It's confidentiality agreements, and if I can scroll down a bit, I've got something else. Exclusivity agreements, I've gone back. Okay, we then come to the legal process, the due diligence. That is essentially what I spoke of at the outset, the need to gather in all of the information. It will take a lot of time for you to do that. You will have to work with us, you will have to cooperate with us to come up with all of the information. And what we want to do is, as I said before, is to have all of that covered off so that when you've got a buyer, we can put it to them and there'll be no delay on your part, on our part, in progressing that deal. There'll be delays on the buyer's part. They may have their own reasons, ulterior motives to delay it, but we don't want it to be down to us where we're saying, okay, we will provide you with the replies to these inquiries once the client has provided us with the information. Legal process, the legal documents, most important document is purchase agreement. Traditionally, the buyers or lawyers prepare that. If it's a firm we deal with not infrequently, that's fine. We will know what to expect. If it's a firm we've not come across before, or otherwise we think there's good cause to suggest it, we'll propose preparing it ourselves, drafting it. The disclosure letter. The disclosure letter is something that we will work with you on. It's a document that qualifies the warranties that you will give in the purchase agreement. Now, I don't know if anybody is familiar with warranties. Basically, that's a method by which you will be giving the buyers assurances on issues that really you've got the knowledge about, and you may have answered questions about them, but they are so reliant on you to tell them and give them an assured position. So that will be given in a set of written warranties. Tax is the best example. You will say, for example, very broadly, that there's been no VAT investigations in the business. That's a promise. That's a warranty. If in fact there has been an investigation maybe 5 years ago, we would set that out in the disclosure letter, and we would set out what the outcome of that was. So in that way, it's a very important document. We've then got the property documents. Are you selling the freehold? Are you granting a lease? If you own the freehold, are you assigning the lease? Do we need a new lease? Have we been dealing with the landlord on obtaining that lease? These are all matters that we will know what we've got to do if you involve us at an early stage, so that by the time we come to deal with a buyer, we'll be on board with that. We'd have approached the landlord if needs be and got agreement in principle, hopefully, that we can extend your lease. Employees, well, as you probably know, the buyers will be very interested in knowing what employees you've got, but frankly, there's not much they can do about it. The employees, whether it's an asset sale or a business sale, will be going with the business. On the odd occasion, you will find a buyer who says that they want you to ensure that on completion, a particular employee isn't there. That can cause, well, it not can cause, it is likely to cause problems. So that needs to have a discussion. And if they really won't give way and the offer to you is that attractive, you'll then have to start thinking about having a without prejudice conversation with that employee. Nowadays, you can have that type of conversation and not having held against you. And essentially, that conversation would end up you agreeing to pay the employee an amount of money in order to accept that on completion they will walk away. It doesn't happen that often, but when it does, it takes a bit of involvement. And we won't know that until the buyer it comes on board, of course. Okay, we go on. And where are we now? Not moving. Yep, completion. Okay, so we've got all the documents agreed. We've dealt with all the inquiries. The buyers have got all their finance arranged. So we come to completion. We've agreed a completion date. If it's an asset sale, that means that the change of ownership has been given and they've put in a notice of commencement as to the date they're intending to trade. For a sale, a share sale, that we don't need to go through that. It's still the company that's carrying on with the pharmacy contract. So we agree a completion date. We wait for the cash to come through. If a buyer's got a lender, which they almost certainly have, it has to come from the lender to the buyer's solicitor and from the buyer's solicitor to us. And when it's in our account, we agree, we have a phone call. Back many years ago now, it was always the case that you had to have physical completion meetings. So you'd have to arrange to meet, usually at the seller's or lawyer's offices, with a banker's draft and all the documents and sign them there. It's not the case nowadays. It's all done. The documents that you are signing, you will get them signed up and sent to us electronically. There may be, I'm trying to think which ones, but there may be one or two that we do need to have the physical hard copies in our hands at completion. For a buyer, that's more important, particularly where there's a lender involved. For a seller, not so important. We will have the documents. We have a phone call. We agree we've completed. We call you and we tell you you've completed, and we send you the money. It gets sent over electronically. At that point, you're probably at the pharmacy. The buyers are probably there, and you will have a physical handover. You will hand them the keys. You'll give them the alarm codes and whatever else has been discussed between us as being necessary for that physical handover at completion. After completion, well, we don't, on that, there's still a bit of work to do, not so much for you, but certainly for lawyers and accountants. There are the apportionments that need to be worked out. So rent, again, looking at a lease, if you pay rent, and assuming you don't complete on a rent payment day, there will be apportionments of the rent to be worked out. We would have actually worked those out ahead of completion, those types of things. But on a share sale, there'll be the completion accounts. And those will be accounts that are prepared by usually your lawyers, but sometimes the buyers will want to prepare them. Doesn't really matter, frankly. But there'll be accounts that will reflect what the net asset position is. So at completion, there'll be a certain amount of money in the company bank account. There'll be certain monies owing from the prescription authority to the company, other debtors, and there'll be monies that the company owes out. So the accounts will be involved in a balancing exercise, and they'll come up with a figure which will then need to be reflected as an adjustment. It usually is a figure that the buyers will be paying to you on top of the completion money. The stock payment is a good example. Common issues, property. I've mentioned Laura. I've mentioned property. They go hand in hand. And yeah, they're all property related. Buyer funding. There's not much we can do really to influence the buyer funding. Hutchings will be very much involved at the outset to understand what funding the buyer is going to need. They will be involved in knowing what lenders the buyer is talking to. And from the experience of all of us involved, we will know whether to say to you, thumbs up, that's not going to be a problem, or suck our teeth and say, well, okay, yeah, we know they will be making us work for our money. In terms of what the buyer's funders requirements are going to be. For example, there are banks, lenders out there that appoint their own lawyers, and the quality of the lawyers they appoint sometimes leaves a lot to be desired. There are other banks, Barclays is my best example, that will generally let the buyer's lawyers act for them as well. And that makes life so much easier. It really does. It's not a computer says no type exercise when that's involved. It's those buyer's lawyers. They're acting for the bank. They certainly owe obligations to the bank. And so they won't simply say to the buyer that we can just take a view on it. They will have to do a job, but it helps immensely. So there we are. Thank you for listening to me. Still can't see me. And I'll hand you back to Sam.
I'm just going to take back control from Tim, and then I'll give that to you, Atif.
That's great.
I'll just take myself out of the picture. So over to you, Atif.
Great. Thank you, Tim. Thank you, Sam. And hi, everyone. My name's Atif Butt, and I'm the Senior Accountant at Hutchings Accountants, where we've been specialising in pharmacy sales across the UK for over 30 years. Today, we're talking about the steps you need to take to maximise the price of your pharmacy in Northern England, and we'll be looking at some of the things you should be considering along the way. We've heard some excellent points from Paul and Tim on coming to market and the legal aspects of a sale, and now I'll be focusing on the tax and accounting matters, so you can get a comprehensive idea of what you need to be thinking about and when. We'll be covering preparing for sale, pre-sale issues, due diligence, the legal process, completion, the completion accounts, and what happens after completion. Let's start by talking about the first step, preparing for sale and understanding your competition. If you're thinking of selling your business in the future, it's never too early to start getting ready, even if you don't plan to sell for some years. Being properly prepared can make a huge difference in not only the price you get, but also how much you're left with after paying the taxman. This has never been as important as it is now, with a number of risks and uncertainties facing the pharmacy sector and beyond. We've all seen how the COVID-19 pandemic has changed our lives in a way that would have been unimaginable a couple of years ago. As we see restrictions winding down across the country, it's still far from clear that this is over, and it's reasonable to expect that it will continue to have an impact on us for some time. Last year also saw the UK's departure from the European Union. With the UK economy facing an unprecedented challenge to recover from these two shocks, we're also quite likely to see changes in tax rates and reliefs coming in the near future. With measures introduced to keep the economy afloat costing hundreds of billions of pounds, the government still needs to find new ways to increase revenue. The Chancellor has commissioned a review of capital gains tax, which is an obvious target for change as it's currently charged at lower rates than income tax. The government has made significant changes to capital gains tax and entrepreneurs relief 2 years ago, which we'll talk about a little later. And it's possible that we might see further changes to come in the short term, or even the relief being abolished completely. Now, Paul's talked about the current state of the market and how it's been affected by events, but as we've seen, there are a number of factors that can change things significantly over the coming years when it comes to sector and market conditions. Of course, it's impossible for us to predict what's going to happen now and in the future, but the best way to manage these risks is to be prepared. Once you've decided you want to sell your pharmacy, be sure to get specialist advice that takes your individual circumstances into account. This will help you work out the best strategy for the eventual sale, having considered accounting, legal, and marketing perspectives. At Hutchings Accountants, we start by reviewing your accounts and tax position to recommend the most tax-efficient way to structure your sale and extract the profits. Getting this right can have huge implications that could make a difference of hundreds of thousands of pounds to your tax bill. It's really important to look at this as early as possible, as getting the best tax treatment sometimes involves making changes to the business years in advance of an eventual sale. If your pharmacy is trading through a limited company, the sale can be structured as a share sale or an asset sale, as Tim explained earlier. To decide on the right structure of the sale from a tax point of view, we calculate what your estimated tax bill would be from each option, as there is a considerable difference in the tax treatment. A share sale means you'll be taxed personally on the gain and pay capital gains tax. An asset sale, on the other hand, would mean the company selling the business and paying corporation tax, and you being subject to a further personal tax charge when you extract the profits. If you are considering a company's share sale or a personal asset sale, you may qualify for Business Asset Disposal Relief, or BADR, formerly known as Entrepreneurs Relief. BADR is a relief that can apply when someone sells all or part of their business and means you only need to pay tax at a rate of 10% on the gain as long as certain conditions are met. Each individual has a lifetime limit of £1 million worth of gains that can qualify, which is reduced from the previous lifetime limit of £10 million. In a share sale, the qualifying conditions are that you need to hold at least 5% of the shares and voting rights of the company, be either an employee or officer, and the company needs to be a trading company. These conditions have to be met for at least 24 months before the disposal. So without BADR, if you were to sell your business for £1 million, you'd be liable to capital gains tax at 20%, which is a £200,000 tax bill. But if you qualified for BADR, this would be reduced to 10%, meaning you'd only need to pay £100,000, which is a huge tax saving. However, there are circumstances where you might not qualify for the relief. It's very important to identify any problems as early as possible so you can take the necessary steps to remedy them, and we'll talk a little bit more about what some of those can be shortly. Now, if you are considering selling your pharmacy in the next few years, we recommend you take advantage of our roadmap to sales service, which is aimed at pharmacy owners who would like to increase the business value before they sell. Using an initial valuation prepared by Hutchings consultants, we identify the key performance indicators affecting the value and look at how these could be improved. We also look at any issues picked up in our review of the accounts and tax position and work out the necessary steps to resolve them to ensure you get the most favourable tax treatment when the time comes. Finally, we map out a list of prioritised targets we want the business to achieve and a timeline over which we want to achieve them. This can be things like reducing stock holding and stock wastage, improving the gross profit margin, reducing staff costs, or making sure the sale will qualify for business asset disposal relief. As part of our roadmap to sales service, we use customised management reports to analyse and monitor the business's performance and ensure that you're on track to meet your targets for improvement. During this time, we also use the management reports to compare your pharmacy to similar pharmacies in a process called benchmarking. These management reports help us to look how the potential market value of the business is changing as time progresses based on the most recent performance, so we can check that things are moving in the right direction. Then we can review the results regularly and re-evaluate our plan where necessary. That way, we can also factor in any changes in circumstances and revise our targets and timeline accordingly. The aim of this process is to increase the value of the pharmacy as much as possible before it's put on the market. It's important to remember that every £100 spent on getting the right professional advice and input can increase the profitability of the business by thousands of pounds, which in turn can increase the value of your pharmacy by tens or hundreds of thousands of pounds when it's time to sell. Now, as we've said many times today, preparation is key, and it's worth looking in a bit more detail at some of the things that we commonly see in pharmacy share sales that can cause problems or indeed present opportunities. I talked earlier about the conditions for BADR or business asset disposal relief. If you have a company with more than one share class, this may need to be looked at, as some of the shares may not qualify for the relief at present. Your company also may not qualify if it holds too many investments or too much cash, as HMRC could take a view that it's not just a trading company and is also engaged in investment activities. The level of cash and any director's loans can also have other implications to your sale, which may need to be considered so that it can be dealt with in the transaction in the best way possible. Investment property owned by a company can cause problems with BADR, but we more commonly see pharmacy companies that own the trading premises they operate from. Sometimes these are included in the business sale, but there are cases where the business owners want to take the property out of the company before the sale so that they can then give the new owners a lease and benefit from the rental income. It's important to take advice on the most tax-efficient way to do this. Another important area that's worth considering early on is what you want to take from the business in the form of salary, dividends, and pensions in the years leading up to your sale. Tax rates on salaries and dividends are generally much higher than the 10% rate you can achieve on a sale with BADR. So in a lot of cases, it makes sense to take less salary and dividends from the business in your final period of ownership if these are going to be taxed at a higher rate. This will mean the company's cash balance will be higher at the point of sale, and care needs to be taken that it's not so much that HMRC no longer consider the company a trading company and BADR is lost. However, it's also important to remember that some dividend income is taxed at 7.5%, which will be rising to 8.75% in April. And even after this increase can still represent a tax saving over the rate you get on sale. So it's well worth engaging in some vigorous tax planning in your final years of ownership to make sure you optimize your takings from the business so that you're paying the lowest rate of tax overall on your lifetime earnings. So these are some of the things to consider before a sale, But now let's talk very briefly about what happens once you've found a buyer. Tim set out the main aspects of the legal process earlier, and as he said, once your buyer pays their deposit, the next steps are due diligence and finalising the sale agreement. As accountants, our job is to work alongside your legal team to make this all run as smoothly as possible. The due diligence process gets underway and the buyer's accountants request a list of information. In a share sale, the buyers will want to go back over several years so they can reassure themselves about the history of the company. Your lawyers will also go through the sale agreement with the buyer's lawyers to agree on a finalised version. We will also review this from a tax and accounting perspective, suggest any changes to the main terms and covenants, and carefully go through the warranties to make sure the buyers are made aware of any exceptional events or circumstances. You can see how important it is to engage accountants and the solicitors who specialise in pharmacy sales to get this bit right. Because pharmacy is all we deal with and we see so many sale agreements in the course of our work, we know what is appropriate and what is excessive to warrant. And so with our combined experience, we're able to limit your risk. In a share sale, the total amount you receive for selling your shares is made up of the agreed price for goodwill and fixed asset of the business and an adjustment for the net asset position of the business at the point of sale. The net asset position is made up of the company's current assets, so things it owns or is owed, like stock, cash in the bank, money owed by the NHS and by the VAT man, for example, minus the liabilities. In other words, things it owes out, like money owed to suppliers or to HMRC or any kind of loans. If there are more assets than liabilities, an additional payment is made for the net asset value. But if the liabilities exceed the assets, a deduction needs to be made from the goodwill price. When the buyers are happy with the results of due diligence and the sale agreement is close to being agreed by both parties, a target completion date is agreed for ownership of the pharmacy to transfer from the seller to the buyer. It's generally helpful if this is done at the end of the month, as this makes it much easier to calculate the position at the point where the business is transferred. Once the completion date has been agreed, we need to provide the buyer's side with an estimate for what we think the company's net asset position will be at that date. Of course, we can't provide exact figures, so what we do is we estimate this as best we can. And this estimate then gives the buyer an idea of the net current asset adjustment that is going to be required in addition to the goodwill and fixed asset price that's been agreed. After completion, once completion accounts have been prepared and agreed by both parties several months down the line, a final payment could be made for the actual amount due as per the accounts. Now, going back to the sale agreement, when we review sale agreements, there are a number of things we look at carefully. For example, the proposed method to calculate the net current asset figure, as this is going to have a direct effect on your final payment. The agreement also sets out the terms by which the business must produce the completion accounts and what the procedure would be if the accounts are not agreed by the buyer. We also go through the warranties in the agreement very carefully, particularly the tax warranties, and cross-check them with the company's accounts for the last few years to produce a list of any facts and circumstances that would need to be disclosed to the buyer, and these are then collated by your solicitor in the disclosure letter. The tax warranties are very detailed and refer to numerous statutes from tax and company law. So it's essential they're looked at by an experienced accountant familiar with your business and pharmacy sales. Putting the time in to get this exercise right means you can sign the sale agreement with peace of mind and confidence that your interests are protected. After completion, the next thing we need to consider is the completion accounts. These need to be prepared with extra care and attention to detail to make sure they're in line with the sale agreement, and also represent the closing position as accurately as possible so you can benefit from all the profits from your period of ownership without paying for any of the expenses from after this date. Once accounts have been prepared on this basis, they're sent to the buyer's accountant and under the terms of the sale agreement, they have a specified period in which to come back and either agree the accounts or inform us of any disputes. After reviewing the accounts, the buyer's accountant will either accept them or send a list of any items they believe should have been included or removed from the accounts, e.g. payments made by the company after completion that they believe were incurred before completion. We would then go through these points of dispute and try to agree them with the buyers and revise the accounts accordingly so that they are then accepted by both the buyers and the sellers. The buyers will then release the final balancing payment for the net current assets, which means you've now received full payment for your business. The final step is then declaring the sale on your personal tax return and calculating and paying the tax due. The sale will fall in a tax year ending 5th of April and would need to be reported in your personal tax return for that year. This would need to be submitted on the tax paid on by the 31st of January the following year. As an example, if you sold your business on the 1st of January 2022, this would fall into the 2022 tax year and your tax return and payment would be due to HMRC by the 31st of January 2023. If you were to receive a total of £1 million for your business and its assets and paid professional fees of £50,000, your total gains from the sale would be £950,000. And the capital gains tax due on this after the application of your annual allowance and business asset disposal relief would be just under £94,000. Once we calculate your tax bill, we can also advise you on ways you can reduce it. If you haven't already, you should also take advice on estate planning and your will. It's also worth considering your exposure to inheritance tax at this point and how that's changed. When you own your business, you benefit from business property relief, which means if you were to pass away unexpectedly, the business assets would be outside the scope of inheritance tax. But once the business is sold, business property relief no longer applies, and your share of the cash proceeds would be liable to inheritance tax if you were to pass away. We also advise all of our clients to talk to an independent financial advisor who can guide you on investments you can make for a tax-efficient income in retirement. Apart from that, the other thing that you will need to think about is what to spend the rest of your money on. Thank you everyone for joining us and listening today. We hope you found it interesting and informative. We're going to go back, I believe, now to see if we've had any questions in. So let's do that.
That is right, Atif. I like your final point there. The tricky question of what to spend your money on. Something I think we could probably spend more time than we've got discussing. So yeah, let me move to questions. I guess if it would make sense now if all of the presenters could share their cameras again. Where are we? Yeah, if everyone can share their cameras, that'd be great, I think, and then we'll go to questions. I've actually been I didn't want to go into that questions panel whilst we were presenting because I realized as I gave you control to my keyboard and mouse, it was then going to move if I then checked the questions. So I'm out of the loop, guys. How have the questions been? Have we got any questions coming today?
Yeah, I'm happy to take the questions forward, Sam. I've sort of been sat on the question panel as everyone's been going through their presentations. The first question that we have in, I think will probably be best addressed by Paul. It's a question as to whether there's any differential in price between a 100-hour pharmacy and a standard hours pharmacy.
Yeah, thank you there, Alex. I mean, generally speaking, in the marketplace, yes, there is usually. With 100-hour pharmacies, the fact obviously they've got those longer operating hours requires more pharmacist cover, higher sort of staff costs. Yes, you quite often see when it comes to valuation, there's quite some significant differences compared to standard hours sort of contract. So generally speaking, in the marketplace, standard hour contracts are perhaps seen slightly more desirable as a result of that. I think maybe as well as as we'll be aware, there are sort of issues with pharmacists cover, locum sort of pharmacists cover costs at the moment, and perhaps that's adding extra sort of pressure on perhaps those prices there. But it's not generally a sort of an exact sort of differential. As I mentioned earlier, so every pharmacy sale is individual. So I would, in the first instance, if we're not sort of engaged with the questioner or haven't conducted a valuation for them, then I'd certainly sort of invite that party to engage with us, and we can sort of look at the business and provide perhaps a more accurate sort of feedback once we've had a chance to do the valuation. It'd be a free verbal valuation there. But yes, generally speaking, yes, there will be a differential. Although we don't sort of value by pence in pound valuation, as explained, it's usually through the EBITDA method. Perhaps as a rule of thumb, pence in pound figures on achieved sales for 100 hours, perhaps you're looking somewhere between sort of 50p up to about sort of 70p. But again, as I mentioned before, you can have figures that are below that and figures that are above that. So as I say, every sale is individual, but yes, generally speaking, there will be lower in price there.
Okay.
Okay.
Excellent. Thanks, Paul. There's another question here which I think will probably be best addressed to Laura. So it's is it going to be an issue for potential buyers if there is an informal property arrangement with a landlord? I don't think
sorry. Yeah, it might be a potential issue. I mean, I would say more often than not it will be. Even if a buyer is buying cash, they're going to likely want to know what sort of arrangement they can be expected to be entering into, and usually that would be sort of governed by any lease that they had. If it's that you don't have a lease with your landlord, most buyers are going to want some sort of lease put in place. If it's a case that is going to be a requirement of a buyer, I would suggest don't enter into it before you've got the buyer involved, because if they have a lender and the lender has requirements, it's just going to end up us entering into a lease and then having to change that lease later down the line, which is just a waste of everybody's time and money. So if you're at a stage now where you're thinking of selling, maybe your property arrangement isn't quite good enough, and you've had maybe discussions with your landlord, obviously just, if you need to have a chat with us, just let us know. But I would suggest not formalizing anything until you know what the buyer needs, because it's just going to end up having to possibly change things down the line. And sort of if you I guess, your rent and any service charge you're paying and buildings insurance is dealt with quite informally as well, the buyer's just going to want to know what they're paying, and they're going to want to know what to expect. So as much as you might not want to have that conversation with the landlord about selling, and however you broach that, we can guide you on the best way to do that, the buyer's just going to want to know eventually. So as much as you might think, I just really don't want to do it, even if they're a cash buyer, they're probably going to want to know what they're entering into, and certainly if there's bank funding, they're not just going to take your word that it's all okay, that they're going to want to see something concrete, I think, in place.
And Laura, you said that you would be able to help, in maybe like the best or most tactful or most sort of historically successful ways to approach that. Is that right?
Yeah, because I think people are afraid when it's early days on a sale to say to a landlord, I'm selling, in case that affects, if the sale doesn't proceed, or if they change their mind halfway through, they might be worried about any potential implications for them, or, maybe rocking quite a good relationship with the landlord.
Sure.
It very much depends on every individual set of circumstances. But yeah, I mean, by all means, if you're sort of worried about how to approach it with them or what to say, we can certainly help. It doesn't have to be, I'm selling, tell me what I need to know, or I'm going to lose a sale. It just doesn't have to be that approach. But yeah, it really does depend on what type of situation you're in, really.
Okay, well, I mean, that's good to know that help is out there, if that is what any of our viewers are feeling or worried about. Welcome back, Tim. We can see you again. We've got time. Where are we? Yeah, we've got time for a couple more questions, I'd say. Yeah, we've got time for a couple more questions. If you're happy to keep running that, Alex, that'd be really helpful.
Yeah, no problem. Yeah, I have one which is coming for Atif, and I don't know if you have a crystal ball or not, Atif, but this question is: do you have any expectation that business asset disposal relief may be affected by this year's budget?
Good question, but yeah, as you say, it's a very, very difficult one for us to answer. I mean, I think what we would say is we saw really quite substantial changes come in a couple of years ago, with the lifetime limits being slashed from £10 million to £1 million. And you know, with the events of the last few years, we have been certainly a bit more expecting that there may be changes to come. As things stand now, there isn't really anything for us to say one way or another that there is any changes on the horizon immediately. So I think we're not expecting any big change in the coming budget, certainly, but you know, we can't really say. So it is possible. I think that the thing with all of this is that what is felt to be within the accounting profession is that there will just be an increase in capital gains tax and a gradual movement to that going up to parity with income tax rates. So I think overall we think change is in the air, and it probably, you know, if you're thinking about selling and you're sitting on the fence as far as tax goes, it's probably a good idea to do it sooner rather than later.
Yeah. Thanks, Alex. Yes, go on, Paul. Yeah.
Sorry, I was just going to say that sort of ties in with a question that I've been asked about. Again, is 2022 a good time to sort of sell? So it kind of sort of dovetails in with that, I guess, really. But I mean, from the sort of consultancy side of Hutchings, I mean, yes, obviously it's very difficult to predict the year ahead. I mean, we can only sort of talk about how we're sort of finding the market right now, and obviously sort of relay sort of figures as to you know, what the market's doing currently. We're finding that across the board there's a high amount of activity. I think there certainly are more pharmacies coming to the market, as I've mentioned, and that's I think, you know, at the moment, looking ahead, you know, we you know, see that, you know, continuing to happen that way. I think there are some, you know, potential sort of headwinds coming our way. Obviously, you know, there's talk about, you know, when there's interest rate rises, in, you know, that inflation's unfortunately sort of creeping up. And I think also something, you know, as David just sort of touched on in terms of those sort of high staffing costs, etc., that all sort of adds to sort of downward pressure on profits. And again, going back to the valuation process, you know, we look at those sort of profits, apply multipliers, and that helps us sort of come to values and marketing sort of prices. I just think that, you know, that those high costs that are perhaps out there at the moment being endured by contractors, we haven't sort of seen those hit the accounts yet. So I think once those sort of if they do continue for quite some time, once we sort of start to see those high costs starting to hit the profit and losses, that will obviously potentially reduce those net profits and could sort of affect value sort of some way down the line. But that in itself might take a year or two to actually come through the accounts. We start to sort of see that. So, but at the moment, yes, I would sort of say, you know, now is a good time to sell, you know, but whether, you know, things will get better or worse or stay the same, obviously really hard to predict, but we can only say what we're seeing now.
Yeah, you and Atif both need a crystal ball, it seems. Do we have time for one more?
Yeah, we've got just time for one more, and I just want to say, you know, I really appreciate everyone's who's still on. I think actually everyone who attended is still with us. So look, thank you for sticking with us till, you know, right till the end. And if we haven't got time or didn't get round to answering your question, we'll take one more now, Alex. But What we will do is we'll follow up after this webinar and send an email around to everyone. You'll get a recording of this session, so you can go back and review it if there's anything that you feel like you might have missed. And also, if you've got any questions, we'll follow up with you directly. So look out for that, and you can also respond to either of those emails, and you'll get in touch with either one of our panel or directly to me, and I'll make sure that it goes to the right party. So yes, thank you for that, Alex. Yeah, one more, I think.
Oh yeah, well actually, just to add to that, Sam, I mean, in terms of getting in touch with us, if it hasn't come across to anyone who's attending this evening that we are all real people and we are there. I think we, as three organisations, all share a very similar ethos in the sense that we do all make ourselves available to be spoken to on the phone, answer emails or whatever. So aside from any questions that might have arisen from this evening, coming sort of specifically out of this presentation, if there are any other issues, then by all means, please pick up the phone to any one of us from any organisation, and I'm sure we'll do our very best to help.
Absolutely, Alex, and it's the reason I think that both our Hutchings consultants and Hutchings accountants and Clarke Mairs sort of work so well together. It's the way in which we'll always be a person, be a face, be on the end of the phone, or email, whatever's needed. So yeah, I agree. And it's good to hear you mirror that sentiment. Absolutely.
Right, quick one, just for you, Paul, and it's an interesting one that's come in from the attendees. It seems that it's actually from a buyer, but they're asking what type of formula for pharmacies where it says offers invited, will help us in calculating a potential offer for a purchase price. So they are on the buy side. How would you advise them to go about that?
Good question. I think ultimately, in the first instance, speak to the consultant who's handling that particular sort of sale. I think in terms of price and what to offer, you've got to, as a buyer, you've got to assess that business, how you would operate it, take advice from your accountants, colleagues, etc. If it's obviously a first-time buy for you, but really, I think it's a case of you having to work out what the value of that particular business is to you. But I would sort of say have a dialogue with us, because I do appreciate when it's offers invited, it can be a case of where do I sort of pitch my offer. It can be many reasons why offers are invited on a sort of sale. So again, that's where it's best just to speak to us. As we sort of said, we're human beings. We'll talk things sort of through with you. But it really, in those sort of scenarios, it is generally down to a buyer to determine what that business is worth to them. Buyers will sort of come to different opinions on value based on perhaps their experience, their financial capability, their desire. So there's a lot of factors that sort of come into that eventual sort of calculation, I guess, really. But I'd say every sales individual, I'd say speak to us, and we can talk that through with you.
Excellent.
Brilliant. Thank you, Paul. Thank you to all of our panelists tonight. You've all been really great, and Tim, well done for struggling through the black camera phase. But we heard you, and it was really interesting to learn.
It makes it a lot harder
talking about today. So that brings us to a close now. Thank you. Perhaps a warmer thank you, even more so to all of our attendees today. We will be reaching out to you shortly, as I said earlier, and that brings us to a close. Thank you and good night.
Good night.
Thank you.
Good night.
Bye-bye.